everyone, and welcome to today's morning report chart appraisals with me, Richard Perry, market analyst at Hantec Markets on Tuesday, 30th of January. We've got a dollar rally that seems to be sort of building. It hasn't yet been decisively confirmed, but it is starting to take shape. But dollar has been picking up broadly in the last sort of few sessions, really, and it seems to sort of be starting to sort of go. You got a resistance at 90 to 91 on the dollar index, and I think a rebound towards that sort of area could well be seen in the coming days, and that move has sort of been driven as we've seen the treasury yields breaking out again. We saw the 10-year treasury above 2.7% yesterday. We saw the 2-year pulling higher as well, but the market has, or the treasury yields have just rolled over a touch today, and that might sort of put a little bit of the brakes on this rally. But certainly this move that we saw yesterday started to sort of filter through into equity markets as well. We had the S&P 500 falling for the most, I say the most, of 2018. I mean, to be honest, the market has barely gone down at all this year, but certainly yesterday was the biggest down day of the year so far. And we can see that is hitting equity markets. And you can say that if treasury yields are pulling up higher than or just moving higher in or too high too quickly, then that would sort of start to leave equity investors a little bit cautious, a little bit more reticent. And you can see that sort of basically still sort of playing out through these forex majors, whereby we've seen commodity prices coming off. The dollar was down yesterday. We also saw oil prices down yesterday. And that's sort of played into this whole correction in equity markets as well. And it's interesting that we're seeing the yen still performing well, though. We're seeing yen and euro both holding up, and they sort of come as these are the two sort of big markets. Big factors that markets are looking out for, in the fact that we're sort of looking at potential for a slightly more hawkish move from these central banks of Eurozone and Bank of Japan, sort of helping to drive a bit more of a tightening cycle going through those markets, and subsequently we're seeing a bit of outperformance there. But we are seeing across the markets a bit of dollar strength, not yet decisive, but certainly it is playing out, and I'll show you through the forex majors that I talk about in a bit. So this leaves us with today's outlook, and today we've got Eurozone flash GDP and US consumer confidence. Eurozone flash GDP at 10 o'clock. Expected to show 2.7, so an improvement to 2.7 from 2.5 last time out on that data. And then into the afternoon, we've got the consumer confidence expected to be strong again at 123. And if it gets an upside surprise, then maybe that could give the dollar another bit of a boost to the upside in this little recovery drive that we've got going on. Now, my chart today is oil. I look at WTI consistently on my morning report, but also I wanted to have a look at Brent Crude today, because I think Brent Crude is further down the road in terms of a possible correction. We've seen this sort of negative candle starting to build through yesterday's move to the downside, but you can see here on the momentum indicators there is a real sort of shift where you've seen the RSI falling to was at a 5-6 week low. We've seen the bear kiss on the MACD lines and accelerating to the downside. We've seen stochastics also to the downside, and it certainly looks as though that the market is sort of just dragging back, possibly for a test of that 68.28 level. That is a key support, which is the first real reaction low within the run higher. You see a loss of that support, and then that would certainly, I think, then sort of be a drag back to this uptrend that we've got on Brent Crude. But the momentum indicators look to be going into reverse. I'm not saying that this is a decisive sell signal on a medium-term basis. Certainly not. This is a near-term correction. However, I think that we need to be mindful that the market could well be having a little bit of a correction near-term, which has room to go. 68.30 is still well within that uptrend trend, which is currently just above 66. So there is room for a correction on oil near term, and the momentum indicators are just starting to reflect that. You can see here on the hourly chart whereby you've got negative configuration, more set up now on the hourly MACD lines, failing underneath neutral yesterday, hourly RSI failing at 60. So a little bit of a rebound. If that fails around sort of the 40 to 50 area, then you'd certainly think that that is a selling opportunity. You've got near-term pivot around 69.60, which failed, and subsequently is a basis of resistance. So that is your sort of first line of resistance. And if you get a 69.60 towards 70 figure area sort of rebound, I think that is a selling opportunity if that starts to fall over again. So I wish you good luck in your trading, and I'll speak to you later.